Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. Hope you're having a great day and doing better than I am. I'm kicking a parasite and a cold at the same time. It is absolutely the worst thing I've ever dealt with in my life. So I hope that you are doing well and appreciate your patience with less content here recently and or moving forward. I honestly, for the next week, I'll be kind of light duty. So what we're going to do is just going to look at the bullet points. We're going to make sure look at liquidation, Bitcoin dominance, and CME futures, kind of see if there's any gaps to pay attention to. Just some little, some important stuff here. So first things first, locally here, this last 7 days on the left, 102 to 103 is a approximate of liquidation areas for the local range. But when we look at the macro, this is a little bit more important. We can see 99 to 101,000. That's the bigger picture there, letting us know there's a lot of liquidation to occur there. So if we continue lower, then that would be kind of the next target area, is that area. Once more, we got a point of control at 97,000 for the macro as well. So solid chance we see support between 97 and 101 if we come back down to that area. Now, the thing you recognize too, and this is kind of throwing things off, if you're not familiar, this is basically a post that James Wynn sent here, just kind of letting him know, or letting us know that he's giving up on perpetual futures. This was posted last night. And the problem with this is a simple fact that we can see that he hasn't discontinued trading. Still has a pretty significant position at about 106,000 is the entry. So as per usual, down on their entry as well. So keep in mind, as long as people like that are trading, we're going to have some tumultuous markets. But what we want to look at here is kind of some other things that are important to recognize. So we look at liquidation, we know where we're at with that. We look at liquidation delta, we're at 14 billion approximately in liquidation delta shorts. That means we have more shorts than longs in the market. You generally don't want to try to take a long against that. It's just best practice to avoid doing so. When we look at our points of control or open interest, generally the same thing this last 30 days, we can see 105, roughly 105.4 and 106.7 are those two local areas there, implying we have resistance at that range. We can see this pretty obvious resistance here at about 105, 106. So if the price comes up to the 105 to 106K range, it seems sensible to consider a short position, just based on that simple fact that those are mostly resistance above us and there's very little support below us, at least in regard to volume. Okay, so taking a look here at before we look at the weekly, let's quickly recognize Bitcoin dominance here and understand that Bitcoin dominance has been going up, which is generally unfavorable, right? It implies that if Bitcoin pulls back, which we've seen recently, altcoins are due to dump. Now, if Bitcoin continues higher, that implies altcoins are going to go down too. So it's kind of a lose-lose situation when Bitcoin dominance is up. So that's kind of not a great situation. Looking at the weekly time frame, we can recognize here as well, we are above all moving averages once more, no big deal there. We've got our macro point of control here at approximately 97,000. Obviously, if depending on where you look at it, we do have other concentrations down as low as 84,000. We don't need to worry about that. But more locally here, we can see 104. 104,000 is that stronger area of support here for us locally. That's like the secondary or tertiary point of control in the big picture ever since November. Okay, so that's generally favorable. However, we lose 104, I think 97 to 101 makes more sense. When we look at the overall situation here, we can see stochastic is swinging down. MACD not really doing too much. And then RSI, we got our money flow index below the RSI, but RSI is over 50. And that's generally favorable too. So I don't want you to misinterpret here and think that I'm totally bearish. I'm not, but a shorter term continuation makes a lot more sense here. Here's a couple of reasons why. If we zoom in on the daily, we can recognize here as well that we are underneath the 20-day SMA. That's usually a shift in momentum, right? That kind of provides us with understanding that could be the local resistance range, okay? Now again, SMAs are ranges. They're not like exact. If you've ever looked at SMAs, for the most part, they're tested, yes, but they're not like a consistent area. Nothing is truly consistent in trading, but for the most part, the consistency here is that if we look at our 4-hour time frame, we can recognize that the 50-day SMA is working its way down. That's why I have this trend line here too, by the way, if you're like wondering why it looks a little funny. Just kind of gives us perspective that we're still in a lower high, lower low pattern, all right? So that's generally not something you want to try to take a long into. Now, if we take a look at our kind of, 4-hour time frame and recognize our RSI is below 50, money flow index is higher, which is generally good, but once more, Mondays are flawed with MFIs. Reason why? Low volume weekends, so don't trust MFI on Mondays. We can also see stochastic swinging up with our RSI, SMA, basically above that moving average. So there's still some favorable things here, but also a lot more disadvantageous scenarios. And we take a look at the hourly too. We can confirm with the Ichimoku Cloud that we are kind of above and below kind of this weird range right now. So it is difficult to want to consider a trade in either direction, honestly. If I were to consider a trade, I would say the local high here of the 105 to 106K range makes more sense, just based on the simple fact that we have some macro resistance in that area. And those are things I can highlight on our playout chart that I'll post on our Twitter, Telegram, and Discord. If you're not familiar, it looks a little something like this. All right, so that's kind of where we're at there. Overall, not a terrible situation, not a fantastic situation, generally normal stuff here, right? But key takeaway, I would say the bullet points is that 104,000 is that rough estimate of support in the local range. But we lose that. We got a significant fair value gap as low as 97,000. That could still be on the table. So me personally, I think shorting in the 105 to 106K range, I'm leaning a bit more towards that, just based on the simple fact that we have a lot of our local highs should be working as our local bottom, which was once more this range of 107 to 106, that should work as our new high. We have a lot of confirming factors. So until we break this descending trend or get back up over some SMAs or just in general, we see a dynamic shift here, there's no reason to presume the price is going to go up anytime soon. That's just kind of the consensus there. So once more, kind of a mixed bag, but that's where we're at. I hope that makes sense and I described that correctly. Thank you so much again for being patient with me. And obviously, I hope that you all fare well. We'll look forward to seeing the next one. Thanks again so much for your time. Take care.